The date, August 6, 2025. A seemingly ordinary day that would soon be etched in the annals of economic history. From the heart of Beijing, a thunderclap reverberated across the globe. The announcement, unexpected and severe, stunned world leaders and economists alike. The Chinese government declared an 84% tariff on a sweeping array of U.S. imports, a move that sent shockwaves through international markets. This isn't a minor adjustment, a mere fine-tuning of trade policy. It's a seismic escalation, a dramatic shift that threatens to redefine the landscape of global commerce. This action marks a significant turning point in the already tense U.S.-China trade rivalry, a conflict that has been simmering for years. The move instantly makes American goods, from agricultural products to manufactured items, far more expensive, almost prohibitively so, for Chinese buyers, effectively pricing them out of the market. This threatens decades of carefully cultivated business relationships, built on the promise of access to China's vast and ever-growing market, a market that has been a key driver of global economic growth. With little to no warning, the announcement blindsided businesses and governments alike. Shipments already en route, laden with goods destined for Chinese consumers, are now in limbo, caught in a bureaucratic and economic crossfire. Long-term contracts, painstakingly negotiated and meticulously drafted, are thrown into chaos, leaving businesses scrambling to assess the damage and chart a new course. Washington and Wall Street are on edge as analysts and policymakers work feverishly to understand the implications of this unprecedented move. The financial world is bracing for the fallout, anticipating market volatility and widespread economic uncertainty. This is more than a simple trade spat, a minor disagreement over tariffs and quotas. It's a fundamental shift in the global economic order, a potential turning point in international relations. It signifies a profound change in the world's most important economic relationship, a partnership that has shaped global trade for decades. For many American industries, particularly those reliant on exports to China, the Chinese market has effectively become nearly unreachable, a distant and unattainable prize. This transformation happened virtually overnight, leaving businesses scrambling to adapt to the new reality. The scale and suddenness of this tariff are unprecedented in modern economic history, a move that few anticipated and even fewer were prepared for. It signals a new, more confrontational phase in international trade relations, a departure from the norms of cooperation and negotiation. This action has profound implications for U.S.-China relations, potentially reshaping the geopolitical landscape for years to come. The world is watching with bated breath as governments and businesses grapple with the potential consequences of this dramatic escalation. Will the U.S. retaliate with its own set of tariffs and restrictions, further escalating the trade war? How will global markets react to this sudden shift in trade policy? And what will be the long-term impact on the world economy? For American workers, companies large and small, and consumers who rely on affordable goods, the effects of this tariff will be real and immediate, impacting livelihoods and bottom lines across the country. This isn't just about abstract economic theories and financial models. It's about power, economic leverage, and the shifting balance of geopolitical influence in the 21st century. It's about the future of global trade, the rules of international commerce, and the very structure of the world economy. The era of predictable, ever-deepening global integration, characterized by free trade and international cooperation, may be over, replaced by a new era of uncertainty, protectionism, and geopolitical rivalry. So, what exactly is a tariff? Think of it as a tax a country puts on imported goods. When American products arrive in China, the government now adds 84% to their price. This makes U.S. goods much less competitive, pushing Chinese buyers toward local or alternative foreign products. Tariffs are used to protect domestic industries, generate government revenue, or as political leverage in disputes. In this case, it's a clear act of economic retaliation. Ultimately, the cost is paid by someone, usually the consumer, but sometimes the exporter or importer. Tariffs ripple through supply chains, raising prices and forcing tough business decisions. An 84% tariff is designed to disrupt, and it will. China's new tariff, a sweeping measure impacting a wide array of goods, hits the heart of American exports, striking at the core of the nation's trade relationship with the world's second-largest economy. This isn't just a minor adjustment, it's a significant blow. U.S. farmers, especially those selling soybeans, who have long relied on the Chinese market, corn, another staple of American agriculture, pork, A key component of the American meat industry, and beef, cornerstones of the agricultural sector, are among the hardest hit, facing potentially devastating consequences for their livelihoods and the broader agricultural economy. The impact is already being felt across rural communities, as China has long been their biggest customer, a vital market for their produce and a key driver of their economic stability. The loss of this market is a major concern. With American crops now prohibitively expensive due to the added tariff burden, Chinese buyers will turn to Brazil, seeking more affordable alternatives, Argentina, another major agricultural exporter, and others, creating new trade relationships and potentially reshaping the global agricultural landscape. This shift could have long-term implications for American farmers. The pain doesn't stop at the farm. It extends far beyond the agricultural sector, rippling through the entire American economy. American-made cars, once a symbol of quality and innovation in the Chinese market, heavy machinery, essential for infrastructure development and industrial projects, and industrial equipment, vital for manufacturing and production processes, are now luxury items in China, their appeal diminished by inflated prices, priced out of reach for most, significantly reducing their competitiveness and market share. Tech and electronics are also targeted, facing increased costs and reduced demand, disrupting supply chains, creating logistical nightmares, and forcing U.S. firms to rethink their China strategies, reassessing their investments and future plans in the region. Even everyday consumer goods like oranges, a refreshing treat for Chinese consumers, nuts, a popular snack and ingredient in Chinese cuisine, branded apparel, sought after for their quality and style, and cosmetics, are affected, becoming less accessible to the average consumer, making them premium-priced rarities reserved for a select few who can afford the inflated costs. The message is clear: the impact of these tariffs is far-reaching and indiscriminate. No sector is safe. Every industry, from agriculture to manufacturing to consumer goods, faces potential losses. The tariff is a broadside, not a surgical strike, designed to inflict maximum damage across the board, designed to maximize pressure across the U.S. economy, creating uncertainty and potentially slowing down economic growth. American brands that once thrived in China, enjoying significant success and market share, now face a steep uphill battle, struggling to maintain their presence and competitiveness in the face of these new challenges. For many, the Chinese market may be lost, or at least significantly diminished, for the foreseeable future, creating a period of uncertainty and potential economic hardship. The impact is immediate, severe, and widespread, affecting businesses, consumers, and the overall economy. This is economic warfare on a grand scale, a battle of tariffs and trade restrictions with potentially far-reaching consequences. The U.S. export economy just hit a wall, facing significant barriers and a potential decline in exports. For U.S. businesses, the fallout is swift and brutal. Farmers and manufacturers lose access to their biggest export market overnight, leading to surpluses, falling prices, and tough choices. Factories may cut shifts or lay off workers as orders from China vanish. The pain ripples through supply chains. Truckers, port workers, and logistics staff all feel the squeeze. Uncertainty chills investment. Why expand or innovate when a single tariff can wipe out your market? Small and medium-sized businesses lacking global reach are especially vulnerable. Many may not survive. The result: job losses, shuttered businesses, and a wave of economic anxiety. The tariff's true cost is measured in livelihoods lost. China's move is calculated, not impulsive. It's a direct response to U.S. actions, tariffs, tech restrictions, and broader geopolitical tensions. The tariff sends a message. Beijing won't back down and can inflict real economic pain. It also serves China's long-term goal of boosting domestic industries and reducing reliance on U.S. technology. By making American imports unaffordable, China gives its own companies room to grow. Domestically, the move projects strength and rallies nationalist sentiment. Internationally, it signals to other nations that China is a force to be reckoned with, and that aligning with the U.S. carries risks. The tariff is both a warning and an invitation: trade with China, not against it. This is about reshaping global commerce on China's terms. For Chinese consumers, the change is immediate. American goods become scarce or sky-high in price. Shoppers will turn to domestic brands or imports from other countries, accelerating the rise of Chinese companies. For the middle class, it means fewer choices and higher prices for once familiar products. For the wealthy, American goods may become even more desirable as rare status symbols. The government frames the tariff as patriotic, encouraging consumers to buy Chinese. Many will embrace this, seeing it as a way to support their country. The result? A shift in brand loyalties and a lasting decline in the appeal of U.S. products. The Chinese market is closing its doors to America. While shocking, this isn't the first time tariffs have rocked the world. The Smoot-Hawley Act of 1930 raised U.S. tariffs to record levels, triggering global retaliation and deepening the Great Depression. More recently, the U.S.-China trade war of 2018 to 2020 saw tit-for-tat tariffs, but nothing close to 84%. Past disputes, like the Banana Wars or the Airbus-Boeing fight, were targeted. This is a broad assault. History shows tariff wars hurt both sides, raising prices, disrupting trade, and often spiraling out of control. The lesson: no one truly wins a trade war. The current move is more extreme, aiming to sever key trade ties, not just negotiate. Once started, these conflicts are hard to end. The risk of prolonged economic pain is real. The world has seen this movie before, and it rarely ends well. Trade wars hit consumers hardest. In China, American goods become luxury items or disappear altogether. In the US, retaliation means higher prices for Chinese-made products, electronics, clothes, furniture, and more. Supply chains are global. Tariffs raise costs for companies and consumers alike, even for domestic products. The result? Less choice, higher prices, and a squeeze on household budgets in both countries. The principle of comparative advantage, where everyone benefits from trade, is sacrificed for politics. Ordinary people pay the price for decisions made far above their heads. The global marketplace shrinks, and prosperity suffers. This is a lose-lose scenario for consumers everywhere. The cost of conflict is felt at the checkout line. With the tariff in place, the world holds its breath, waiting for America's response. The initial move has been made, but what strategic countermoves are being planned behind closed doors? Nations are on edge, analyzing every statement and action, trying to predict the next phase of this high-stakes economic game. Retaliation is not just likely, it's almost guaranteed. The question isn't if, but when and how severe. Economic advisors are working overtime, calculating the potential damage and formulating strategies to mitigate the impact. Expect new U.S. tariffs on Chinese imports, targeting key sectors and industries. These measures are designed to inflict economic pain, but they also carry the risk of backfiring, hurting American businesses and consumers in the process, escalating the conflict into a full-blown trade war. Each new tariff and counter-tariff ratchets up the tension, creating a climate of uncertainty and fear in the global marketplace. The potential consequences are far-reaching and unpredictable. Diplomatic efforts may follow, a glimmer of hope amidst the escalating tensions, but both sides will demand major concessions, making a resolution difficult to achieve. The negotiating table becomes a battleground of its own, where economic power and political leverage are wielded like weapons. Global markets will be volatile, reacting to every headline and rumor. Investors are bracing for a roller coaster ride as fortunes are made and lost on the shifting sands of international trade, and other countries will scramble to adapt, seeking new trade partners and forging new alliances to navigate this turbulent landscape. The global order is being reshaped in real time, as nations jockey for position in a new economic reality. Some may benefit, seizing opportunities created by the disruption. These nations could emerge stronger, having successfully navigated the storm and capitalized on the misfortunes of others. Others will suffer, caught in the crossfire of this economic war. Their economies may falter, their industries may decline, and their people may face hardship as a result of decisions made far beyond their borders. The risk this trade war spills into other areas, far beyond the initial tariffs and trade barriers. The interconnectedness of the global economy means that the consequences will be felt in unexpected and unpredictable ways. Security, technology, even climate cooperation, as international partnerships are strained and priorities shift in response to the economic pressures. The fight against climate change may be sidelined as nations focus on protecting their own economic interests. The stakes are enormous. The future of U.S.-China relations and global stability hangs in the balance, with the potential for long-lasting consequences that will shape the world for generations to come. The decisions made in the coming months will determine whether we move towards greater cooperation or deeper division. For now, uncertainty reigns, casting a shadow over the global economy and leaving businesses and consumers alike in a state of anxiety. The lack of clarity makes it difficult to plan for the future, hindering investment and innovation. The next chapter is unwritten, but its impact will be felt for years, shaping the economic and political landscape for decades to come. The choices we make now will determine the kind of world we leave for future generations. This is more than a trade dispute, it's a turning point for the world economy, a moment of reckoning that will determine the future of globalization and international cooperation. The path we choose now will have profound and lasting consequences. The choices made now will shape the global order for decades, influencing everything from trade and investment to security and diplomacy. The weight of responsibility rests on the shoulders of world leaders, who must navigate this crisis with wisdom and foresight. The world is watching, and the clock is ticking, as we stand on the precipice of a new era in global affairs. The time for decisive action is now, before the consequences become irreversible.